All right, hey there. Good morning, everybody. Excuse me. It is just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 26th of October, 2021. Here in an overcast, Bernie, Texas. Overcast, but still absolutely beautiful out this way. I am Christopher Inks with Texas West Capital, and you know what we try to do here is we try to kind of get you out of all that fluff and nonsense and. There's so much half-truths and outright lies there when it comes to trading and markets and macroeconomics there online that most new traders, you really don't have much of a chance at first because you don't know what you don't know. And so we're here to kind of cut through all that, if you can make the time for it and kind of discuss what it takes to be a successful trader as well as looking at some of the charts. So hopefully y'all are doing all right there. What was it? Tesla there yesterday hit that $1 trillion mark with that Hertz order. And we've seen some tweets talking about how how it's funny that they made that while, Hertz won't actually be able to follow through on it because they'll go bankrupt. I don't know. But anyway, a lot of stuff going on there. Elon Musk, on his way to becoming the first $1 trillion man, right? We'll see what happens. A lot of craziness, a lot of overextension in the markets, guys. We've been talking about this for a while, and for some people that are new to financial markets, they think these things have to happen overnight. I've made it known that I'm looking at a 233 year, basically a bull market, 233 years. We're looking for a correction off of that, and so it's going to take a bit. It's going to take a bit to kind of wear all that out. But as we continue to go over week after week here, we mentioned new indicators and whatnot that are, finding themselves well beyond what it was during Black Monday there in October of 1987, beyond where it was at the height of the stock market there in 1929 before the Great Depression. And how all these things are just really beyond there. We've looked at other things that other people have looked at. Elliott Wave International is one of my favorite other sites to pay attention to, guys. They've got a lot of really great information. As a matter of fact, now that I'm saying that, right now you can actually get over there. Let me see if I've got that link here. They've got a free pass event that I've mentioned a few times here, guys. And you definitely want to jump in and be a part of that. It's just a whole bunch of their information for free. Hundreds of dollars worth of information. Let me see. Let me go ahead and pull this out here for you guys. All right, there we go. Excuse me. And so you'll see it's right here. It's this one. This link is right there. And I'll go ahead and pop this in here for you guys. So you can click it on there if you maybe don't have Twitter or something like that. But man, you know what? Take advantage of it. You don't have to sign up with a credit card or anything. You just join their My Club, My EWI Club or whatever it is. It's their free thing. And then not only do you get access to this, but they'll email you when they have other free pass events with the different things that they do throughout the year. And so if you want some free, real content, man, that's the way to do it right there. But yeah, and so we looked at a chart of one of theirs recently. I even put it in one of my newsletters where we were looking about the extension of margin and how margin itself was at these outrageous levels and really kind of signaling that the market probably doesn't have a lot of money left that it can actually put into it. If we look at how much credit versus, availability is left there with the margin accounts, with stocks and everything. So, it's just a whole bunch of things, guys. By the way, if you want this, you can join right here, Market Breakdown, if you've got Twitter. And that will, it'll get you access to our free weekly newsletter comes out. And what I do is I take a theme every week, a macro event kind of thing, and I discuss, what it has to do with the week. The week's news and events and whatever. And then I help explore it a little bit and get you guys to kind of understand what it really means. Now you can subscribe to it right here if you haven't done that yet. We'll go ahead and pop that link in there for you as well. And then that way, again, guys, I do it for free. And, Scott, if you guys follow Scott Melker, he does the newsletter thing really often. I don't know how he does it because this newsletter alone takes me probably, 10 hours to do. And so, Scott's doing it like every day. I don't know how he does it. But a bunch of craziness going on there, right, with that. But, yeah, it's free information for you, so jump on it while you can. By the way, you can join us at howtotradetowin.com. We'd love to have you there. Tier 3 is where it's at. And we do have a special going on right now, by the way, guys. I do have, if you're new to TWC, let me see here. I believe I've got a link in here for a, yeah, there we go. There's the code right there. If you're new, go to the howtotradetowin.com. Use this code right here, this tier 3 underscore 50% off. And you can get your first month for half price, guys. And the cool thing is, once you're in there with us, you'll usually receive, once you've joined us and whatever, you usually receive some sort of discounts throughout the year, that we give just to our members, that are different than the ones that we give to everybody else. Plus, there's opportunities to get in for a lot cheaper and everything. So, anyway, man, now's the time to do it. Jump on in there. We'd love to have you with us. Tier 3, man, it's everything we got as far as education goes. Well over 130 or 140 hours of video education, guys. Chart requests, hot takes. There's just so much that we do. Yeah, man, jump in there. We'd love to have you there. Better than all that is our community. Great bunch of people. Most of them have been with us for multiple years now. Many of them being with us since I started this thing just over 4 years ago in, September of 2017. So I think that kind of really makes it a great community to be in because, everybody kind of knows everybody. Everybody's very helpful, very kind, very encouraging and embracing and welcoming for new members as well. So jump on in there and then don't be afraid to say hi. Our people love meeting new people, man, because the way our group of traders sees it, man, is that if you come in there and you learn how to trade and be a better trader and you're with them and they've done the same thing, then you've got more eyes out there over all the markets finding opportunities, and everybody gets to win that way. And so, hey, that's what it is there, right? Anyway, let's see who's here already. We've got Bill checking in. Brian is here. He says, getting ready to learn from the greats. Oh, well, I appreciate that. Alan N., hello, good to see you there. Grabbing some French press and ready to learn. Oh, well, all right then. Andre, what's up? Data's here. Who else is here? Boris, Brian, man, all of my favorite people. Tell you writers checking in. Brian says, Brian Allen says, I know nothing. Here's the great thing, guys, and take it from somebody who's actually got, sadly, I don't know if this may make you cringe. I've got 2 master's degrees and a law degree. I love to learn, right? It's just for me. It doesn't make me any better than anybody else. I just love to learn. But the one thing you get to understand as you get up in higher education is that your education becomes more specialized. But that opens you up to understanding that the higher you go, the more you understand, the less you know, right? You understand that the world's bigger and greater and wider out there than what you thought, right? And so it's really kind of puts you in your place. When you figure out, man, there's just so much out there you really don't know. It's the same thing for trading, guys. I think I'm going to start adding a tool of the week section where I can just kind of lambast somebody who acts like an idiot online to me. No, I'm not going to do that. I should, though. But, the reality of it is most people come into trading and into macroeconomics and economics in general with no real no real understanding, no real education in it. They really don't understand how things work, but yet they're very, very vocal about how their opinions are correct and how those of people who've been doing it successfully for a quarter of a century, myself, or Peter Brandt, 40 plus years, right? Or other, macroeconomics and how we're the idiots. We can't possibly know what's going on. Guys, at the end of the day, do what you need to do. But I'm going to tell you right now, in life and in trading, man, you should always be open to understanding more. You should always approach it with the idea that maybe you don't know what's going on. Especially when somebody who has a lot more experience is maybe coming at you. It doesn't mean they're necessarily correct. But, what we see online is a lot more of this immediate name-calling and acting like a total douche. Rather than just being a normal person and really just wanting to understand, At the end of the day, that's what I do in everything, guys. I've got a lot of experience. I've been really successful with trading and investing, but I think I like to give that credit to the fact that I don't ever believe that I know everything about it. I know a lot about it. It comes with time, guys. When you do something successfully for a significant amount of time, you learn things, right? But I'm always learning. I'm always trying to refine how I understand things and whatnot, right? And so that's not just for trading, but that's economics wise, right? So if you know my background, my undergrad degree was with economics. My first master's degree was applied psychology with a focus on applied economic psychology, right? So understanding how and why people do the things they do economically, right? And so when you do that, the way I've viewed the economy has changed as I've gotten older. As in the last 10 years, guys, the last 10 to 13 years or whatever, leading up to the GFC, and then since then, have really honed a lot of changes. It's really kind of put out there a lot of new information. Again, the GFC hit back there in 2008. Everything tanked, right? Yeah, I think most of y'all probably were around at the time, and even if you weren't in the market, you were a part of this, right? You saw it. Lehman Brothers went down. Some banks were saved. Some banks were put out to pasture, right? And then after that, we got QE, right? So up until that point, the big QE country had been Japan, right? And so QE for Japan was during the 90s there, which is where they started it. And that led to their lost decade, right? Basically not much of anything happening, right? And so then the U.S. comes in and they decide to do it a little bit differently, but it's still QE, right? And so the thought at the time was all this money printing, which was significant at the time, compared to what had been happening prior, right? I need to put the money printing in quotes, because if you understand QE, then you understand it's really just an asset swap, not really money printing as you think about it in terms of hyperinflation and stuff, which still have a lot of trouble trying to explain to people who aren't well versed in this. But the thought at the time, even Kathy Woods explains that at the time she thought that QE was going to lead to all this excessive inflation, right? And so what did we notice? We noticed over the next 10 years, basically, because it started around 2010, that instead of getting inflation, the Fed had difficulty even keeping inflation above zero. So all this excessive money printing, and yet inflation, it actually dipped into deflation a few times there, I think around 2012 or 13, and then again around 2016 as it came through, right? And so here we are doing basically the same thing, right? Just to a higher degree, and yet we still have people saying, oh man, hyperinflation, right? You have Jack saying, and now I don't know that Jack really meant it, Jack Dorsey of Twitter and Square fame there, right? I don't know if he really meant it or if he's just trying to get people, talking about Bitcoin. But at the end of the day, if you look at the responses on there, so many more, even in, man, maybe I shouldn't have done it, man. I'm regretting it now, but, having replied to him and said, no, it's just a misunderstanding of how QE and Fed, the Fed printing actually works. But most of the comments coming on, you will see, they're very personal. There are a lot of attacks. There's not a lot of, I want to learn. There's a lot more of, you're an idiot. And it's funny because they even say that about things that are widely available online. If you want to understand how QE works, right? This is all widely available information online. And so, there's a difference between, money printing and money actually entering the economy. And so two great places to start if you really don't understand this are the Federal Reserve Act and open markets operations, okay? And those will get you started kind of on the way, and you'll start understanding, okay, well, the Fed's printing all this money, but it's not actually really making it on the economy. Real money creation, as I've told you guys time and time again, comes at the bank level, right? It comes when the banks actually make the loans. The Fed cannot directly stick money out there in the economy, right? So the way that money moves is through your primary deals, which is basically just your large banks, more or less, right? It's your large financial institutions. But the money goes to them. They use that to buy securities, treasuries, and then they bring back those treasuries, which they then sell back or loan back to the Fed, and they take the cash, and so they're buying. So it's an asset inflation thing, right? It's not inflation because there's more money out there generally roaming the economy. It's because the primary dealers get it and they're the first in line to grab securities. Boom, pops up, right? And most of the money that actually gets printed by the Fed actually just ends up in the Fed's vault. And the Fed's vault is untouchable. You can't go in there, dip in, and pull money out. It sits in there as reserves for the banks. And so the banks then, because there are legal requirements, the banks have to follow certain laws about how much they can lend based on their assets and their reserves and whatnot. Now, if you've been following QE here, especially over the last few years, I think most of y'all understand that we've got fractional reserve banking, right? And so that requires a certain limit, right? You still have to have so much on reserve. Well, during QE here, most recently, these past few years here, the Fed, the laws actually went out there dropping that limit, right? And so, there's all this going on. But at the end of the day, basically, banks have to have a certain amount of reserves that they can point to and say, for the law, to be in requirements, legal requirements, they have to have so much in there. So they go there, they reference that, and then they can make out loans. The problem is, we know that loans year over year are down, right? Do you guys know that? If we go over here, there's a great site. If you guys have never been to it, it is, I'll just put it right up here. It's the Fred site, okay? This is the St. Louis Fed, Fred site. And you can get a lot of information about the government and what's going on there. So if you look at loans here, right, you can just type in loans, boom, pop it right there. And you go right here, commercial and industrial loans, all commercial banks. And what this is going to show you is we hit a peak here of loans back in May of 2020. And since then, we've got this strong downtrend. So year over year, loan creation is actually low. It's actually very low compared to where it's been. It's dropping, which means comparatively less and less loans are being put out, which means less and less money is actually entering the economy. And so if you don't actually have money entering the economy, it doesn't matter how much money is actually printed. It's sitting outside that economy. It's sitting out there in the banks. It's just sitting there. And so if it's just sitting there, then there is no monetary inflation. Monetary inflation, yes, there's inflation of the money supply, but that means beans, guys. That doesn't mean anything. If that money is not actually leaving the banks and it's sitting there, then there are no excessive dollars chasing the same products, giving you price increases based on monetary inflation. And this is really hard for a lot of new people to understand today because they're going in and they say, okay, well, then, and if you look at my reply, some of the replies on there, they don't just ask simply. They're very argumentative, very accusatory, very rude, right? They're like, well, then explain why are we got all these prices going on, these prices rising now? Production, guys. It's production bottlenecks, supply bottlenecks, delivery bottlenecks. As I've shown you guys time and time again here recently, LA port, which is the 8th or 9th largest port in the world, is backed up. It's backed up over a month. In other words, it's going to take over a month just to get through that. They've actually increased their operations to 24 hours a day now to try and bring that stuff in. But guess what, guys? Even though they bring it in, now it's going to sit in warehouses because we've got a truck driver shortage here in the U.S. So you have delivery bottlenecks. So you have demand that's still up there, and you have a lack of supply coming in. Now, it's not just finished goods. It's also base goods that are used to create these goods. The big talk right now is, I think, magnesium, right? Magnesium is used in a lot of things. And there's a big inability to get that to where it needs to go, right? There's production and, delivery bottlenecks there. And so the demand is still there because we've had rent moratoriums here in the U.S., especially. And I tend to talk from the U.S. more than anything else because that's where I'm at. You got rent moratoriums that we had for for quite a while there, and mortgage moratoriums, and that's even still it's still in some areas where that Delta variant of COVID popped back up. So even some of those areas are still getting that, right? We had increases in unemployment benefits, as well as extensions in unemployment claims and all this kind of stuff. And we had government stimulus payments, which in the grand scheme of things wasn't really a whole lot of money, but it was something there. So you had we had student loan moratorium, which ends end of January. So you have these bills, these biggest bills that people were saying, hey, we don't have to pay now, rent, mortgage, student loans. And so that frees up some money, right? And then you're getting additional money on top of it. So now your demand stays raised while your supply, because you had the shutdowns, right? The government shutdowns with the businesses and everything, not just in the U.S., but worldwide, right? And so you're having a lack of supply, but continued demand, right? And so that's where you get your increase in prices. Now, and then people go, okay, well, what about rent? Why is rent so high? Why are houses so high? Well, again, you've got that going on. House prices were high because we had this major exodus of people moving from cities out into the suburbs and cheaper areas to live, right? And so this affected the actual supply that was out there, right? So you're having an increased demand, but no increase really in supply. So then they resort to house building, right? And so now you've got this increase in demand on building homes, and lumber supply, lumber prices are going up because, again, you have the bottlenecks coming in, right? So you have increased demand and then supply bottlenecks, and that just gives you these huge increases in prices, right? On top of that, what we're finding out, if you guys had been paying attention prior to the pandemic, the big kind of story about millennials was all this, that they're living at home, right? They're in their 20s and their early 30s. They're still living at home with mom and dad because it's too expensive to live out on their own, right? Well, apparently during this pandemic here, because of the things I've already mentioned, they felt like, hey, things are looking better. Things are looking up. I can move out on my own. So now you have an increase in the amount of demand toward rentals and purchases. Now, rents start increasing because now all of a sudden people are getting priced out of buying homes, right? So they have to go to renting. And so now you've got an increase in the number of renters and, again, a limited supply in terms of rentable properties. So more demand than supply, prices rise, right? None of this is monetary inflation created, right? None of this is because there are more dollars, more new dollars chasing the same limited goods and services and whatnot. But, again, to the layperson, to somebody who's not really well versed in all this, you go, well, everybody's making this, the news is making a big deal about how much the government is printing. And on top of that, the news media outlets are making a big deal about how high prices are going. So necessarily one equals the other, right? Wrong. We just talked about that. So, there's a lot more to this. The banking laws are pretty complex and very, very in depth and so there's a lot of more moving parts, but generally all you have to understand is whatever the Fed prints is not really what matters. It matters what makes its way out into the economy. Okay. Now excuse me, the Fed cannot actually directly send money to the government. It cannot directly give money to the government. Federal Reserve Act. Okay. It says that it has to basically, it can only buy and sell securities through the open market, okay? Now, that's your open market operations, which means basically money is going from the Fed to your primary dealers, who are the ones who are buying or selling securities from the government. Now, the government issues debt in the form of securities, and that's how it gets the funding it needs to continue on, right? Now, this is beyond, obviously, taxes and whatnot, but taxes and whatnot are a very small percent of what the government actually spends, right? It gets most of its spending power via issuing new debt. But again, it cannot just trade the debt to the Fed, and that's all there is to it, right? It has to go through the middleman, primary dealers. And so as I discussed earlier, basically primary dealers buy the debt, they bring the debt back, they sell it to the government or loan it to the government, they take that cash and they buy their securities. They are the first in line to buy these assets, these mortgages and stock market whatnot, right? And so so QE then becomes just an asset inflation. It's just a swap. The dollars printed in the Fed get traded for treasuries, right? That's all it is. There's no actual money getting out beyond that, really, unless it goes through the banks. The banks have to create new loans. But again, as I'm showing you here, that isn't happening, right? On top of that, savings rates, if we look at personal savings rates, guys, we can see here, personal savings rate. Look at this, man. We had a huge all-time high up here, since records were collected back here in 1959. We hit up here, this was at that kind of like in that May area of 2020. We hit up here at like 34% savings rate. Astronomically huge, as you can see here. Currently, we're down here at around 9 or 10%, 9.4% as of August. This, as you can see, is still pretty high. We haven't been up here in that area or above consistently since, what was this, 92. 30 years, guys, 30 years, other than this one spike here in 2012, right? So savings rates are exceptionally high. Now, savings is disinflationary, at the least potentially deflationary. Why? Because, again, like what we were talking about with the money creation by the Fed is sitting in the banks, savings means those dollars are not circulating in the economy. They're sitting in the bank. So that has a deflationary or disinflationary effect, at least, on what's going on, right? It's taking money out of circulation, right? And then again, with the lack of creation of loans, you're not getting inflation that way either. Monetary inflation effects, right? So this is kind of where we're sitting here. Now, some people, want to ignore all that and say, okay, well, just think of it as this catalyst of money just waiting to get out there. Well, yeah, it could be, but it's not yet. It's been sitting in there for quite a while, So yeah, it could be that and whatnot. But here's the great thing. You say, okay, well, all this money is sitting in with the banks, and so all we need is some kind of catalyst to make everybody go out there and spend more money, right? And, oh my gosh, prices are high now, so everybody's going to spend more money. Well, yeah, that's all great and well and standard and fantastic until you go, okay, well, the way that the money comes out is through loans, the creation of loans, right? So all the Fed has to do, Fed does control the money supply. It makes the money available, and then it controls how it gets out. And how does it do that? It does it with the interest rate. So if the Fed, if there was this run on taking out loans and it was to fire up there and the economy was really to get overheated, even more than it is now, the Fed could go in and raise interest rates. And so now you're paying more to take out those loans. The effect is that the higher that interest rate goes, the less loans are taken out, right? And so the Fed still controls how much goes out there. Just because it's sitting in the banks doesn't mean it's all going to get out there real quick and easy, and that's all there is to it. So anyway, as I said, there's a whole bunch of this going on there, and most of this, people don't choose to actually go and look up. They sit there and they do sound bites, right? It's all about the sound bites, right? It's all about, oh, this is what it said today. This is what everybody else is saying, especially with social media. It's become such a big thing. I constantly remind you guys of this, right? So I actually posted this here. I've got this Kindle copy of Carl Sagan's The Demon Haunted World. You should read it sometimes, guys, if you haven't. But it's funny because this was printed back in 95, right? And so I highlighted this passage here. And it says, it starts talking about, basically, if you guys sit here and pause this or go back and read this later, you'll see that it basically describes what we're dealing with now. But, if you go down here, the dumbing down of America is most evident in the slow decay of substantive content in the enormously influential media. The 30-second sound bites, now down to 10 seconds or less, and that was in 95. Lowest common denominator programming, credulous presentations on pseudoscience and superstition, but especially a kind of celebration of ignorance. Guys, this is so much what's going on right now. But it's not just in everyday life. The problem, as I continue to tell you guys, is how you view life is how you view the markets. And if in your life that is you, if you rely on sound bites, you don't really look for explanations or understanding what's going on, especially in social media, you start to mimic those same things in terms of trading too. And so again, we get this, everybody talking about hyperinflation now, and how that's definitely here and how it's coming and all this other silliness, but yet they just really don't have an understanding of how money actually enters the economy. Again, we go back to the media. The media says, oh my gosh, the Fed's printing all this money. The media says, oh my gosh, prices are so high. The media convinces you to infer that the high prices, and sometimes they outright say it, are the result of money entering the economy, which, as I just talked to you about, isn't actually what's going on there. So there's a whole lot about this, guys. So anyway, I discussed this kind of thing this past week with the newsletter that went out on Monday. I discussed credit swap spreads, or credit spread. Oh, I can't even say it. Yes. Yes, basically. Right here. Let me see here. Interest rate swap spreads is what I'm trying to say. And how they can kind of help us understand whether the market, and what we mean by the market is the the banks, right? The primary dealers, these kind of things. Their belief in the growth of inflation and the economy and whatnot. And we look at how the compression or decompression of the swap spread, what it means and what it used to mean and how it's different today than what it was then. All right. And so we want to take a look at that. So again, guys, jump in there, check that out if you want. Again, it's a free newsletter. Goes out once a week on Monday mornings. Okay. Let me see here. Anything else we can talk about here? South Korea's Q3 GDP misses forecast. So again, watching world stuff, again, watching China and what's going on over there. Now looking at South Korea, everybody, they kind of default to this. Well, just because the dollar's doing better than the other countries doesn't mean it's good. Well, no, but at the end of the day, there's been this romanticizing of the death of the dollar since the 70s, guys. Since the dollar came off the Bretton Woods, right? Came off the gold standard via Bretton Woods. I mean, if you look back, it actually, all that stuff really started in the 50s. That whole thing happening there, with what's going on with the dollar and everything, was actually just, the formal, cut of it. But you can look back toward what happened in the 50s and upward and see that it actually started back there. But at the end of the day, guys, the reality of it is, sure, is the U.S. dollar going to remain as a fiat currency forever and ever? I don't believe that. I've talked about that before. All fiat currencies, all governments tend to die off, right, at some point. But just because at some point that's going to happen doesn't mean it's going to happen tomorrow. There's nothing going on today that says hyperinflation tomorrow, as I've already explained. But yet people are going to hold on to this, and they're going to be wrong again, and they're going to lose money because of it again. I think there's a bigger deflationary scare than there is an inflationary scare. I think we hit deflation, then stagflation, and then we really kind of get into that larger inflation. As far as monetary inflation effects. So we'll see what happens. Maybe I'm wrong. But I'll guarantee you I've done a lot more research into it than most of the generic lay people that you talk to or that you see commenting online. Okay? So at least with what I'm saying here, at least I've got something backing it, right? At least I've got some real research and some real understanding to back this of what's potentially going on there, right? We can even look back. I posted this article here from July 2021. Everybody says, everybody's losing confidence in the dollar. Not so much. Everybody, the U.S. economy is doing terrible. Actually, we're doing better than most of them out there. We're definitely doing better than the EU right now, right? And that's important in terms of the dollar because, again, the euro makes up a 58% weighted value of the DXY. The next down is the yen, the USD yen, which is only 11 point whatever percent. And then the rest of them are smaller off there. So basically your dollar for all intents and purposes is a mirror image of the euro USD, right? So when we look there and we go, okay, well, as they've noticed here, Daniela here, I can't even say her name there, Mardarovici. So co-head of the U.S. multi-sector fixed income at Macro Asset Management there, back in July was noting there's this massive hunger for positive yield, particularly U.S. dollar-denominated debt. So, when you look at it, you say, okay, well, how healthy is an economy? Well, you kind of look at inflows versus outflows. Is money coming into that economy from foreign entrants, right? And so in this case, yes, it is. It's significantly in. There is this hunger that is not able to be satisfied in terms of U.S. debt. So people want to buy U.S. debt. And they want to buy it because they believe that the U.S. economy is doing well, which we've shown it is, off of those pandemic lows anyway, right? But especially in relation to other countries. If other countries start showing up more so, then, there's going to be, inflows are going to be coming out of the U.S., and kind of going more toward other countries. But as long as this hunger for debt is here, guys, I don't know what else you need to be convinced that that we're doing better than most, which is a positive boost for, the currency, for the USD, right? So, anyway, I didn't mean to get into all that. It just kind of happened. Anyway, you can join us at howtotradetowin.com. we'd love to have you there. So much more of that I talk about over there as well going in, right? Let me see who else is here. Excuse me. Alan's saying Tesla looked like an altcoin yesterday. Yes, it did. Did it not? I'm glad to have you here too, Brian, Alan. Common Man Crypto checking in. He says, remember to wash your hands after you cough or sneeze to prevent the spread of disease. Let me see here. Nevlusian's here. Mark Chenard is here. Oh, man, meatball subs. Now you're talking my, man. You're talking about what I like right there. Let me see here. Kind of catch up with you, Mecca Williams. Well, Brian Allen, man, I'm glad that he turned you on to me as well. Scott Melker, you guys that don't know, Scott was one of the very first people that actually joined TWC back in, September of 2017. I don't think he was the first. I think he was like the third or fourth, but it was all like right there in that first kind of day thing. And I'm not going to lie, we had some issues at first. He and I did. And then it's become this great thing. He's gone off and he's done all these great things that he's doing on his own. Those of you that are coming from him understand. And I like to feel like maybe we had a little something to do with that. I consider Scott a friend. He does a lot of great stuff out there for pushing, wider acceptance and understanding of what's going on with Bitcoin and cryptocurrencies and whatnot, which has really been great. His reach is much further than mine. He gets out there. He's got a lot greater reach out there. So, it's really good to have him out there kind of talking about a lot of these same things that I've been talking about. Because at the end of the day, guys, my goal is to get the information out there. I can't force you to listen. I can't force you to want to learn more. I can give you the information. It's up to you to do something about it, right? So I like having him as that extra outlet out there. He's a great guy anyway as well. I don't know how he deals with all the those of you that are decent people out there, which are those of you following along here, and others out there. I love interacting with you all, but of course, being in that whole thing, there's always just disgustingly rude people out there, and that's it's tough. It's tough to deal with. It's like it's such a waste of time. I don't know, guys. As I've said to you, when you can choose to do something different, when you can choose to be something that is positive in the world, why would you choose to be negative? Why would you choose to be a jerk? It's a choice. I just don't get it myself personally, guys. I don't do that. Is what it is anyway, though. Let me see. Merv, what's going on? Good to see you here. Christopher Arksky still showing up. He says, Bitcoin run over all SHIB. I don't know. Didn't SHIB just take a large hit the other day after a spike up? I don't think the Bitcoin run's over. It hasn't done anything yet to suggest that it is. I mean, again, guys, we talked about people saying this double top here. But again, if this is a double top, then the pattern target based on the height of this pattern takes you below zero. And so to me, what I've learned throughout, the quarter of a century, a little bit more doing this, is that if your pattern target takes you below zero, then it's not a legitimate pattern target, which means your pattern isn't legit. It doesn't mean you can't pull back from there. It just means it's not a double top, right? So, yeah, I mean, again, guys, just all we've really done, look, guys, all we've done, let me show you this right here. Let me just go right here. We'll do this with this line here. All we've done is break out above that all-time high and this area of resistance to test it as support. It's all we've done here. And now we're attempting to rally back up and out. So, if you're thinking, oh my gosh, is the bull run over or whatever, I can't say it's not. I can't guarantee you it's not. But there is absolutely nothing that's happened today that would scream, oh my God, you got to be worried that it's going down however far you think it may go down. Below, 28.8. 28.8 being this June low here on Coinbase, right? There's nothing happening right here that says we are going below here. Now, this could continue to work and play out as something that leads down there. But for right now, I think if you're thinking, oh my God, it's going down below here right now, I think you're just, just, I don't know, what's the term? Just kind of fishing there. You're just trying to, there's no real, there's nothing you can look at here that says that's what's going to happen. So, you're kind of making a big deal out of something that, yeah, maybe could happen, But right now is so much further away from actually happening than price. Price is much more likely to go up from this, overall than to go down below here. You would need this to continue to break on down here. Probably getting below this one right here. Actually getting below this swing low here. You've got to get below, what is that there? 39,600 here to actually say, okay, now we're probably heading down below here. Till that point, no. It's just silly. But, it is what it is, guys. So we continue to watch it locally and we look for, other things to happen. Now, again, from right here, we do have this hidden bullish divergence as we got this support level here on this previous resistance. So we want to see if we can get this to continue up and break out above the top here, okay? We do have a bullish cross down here on Stoch RSI for the daily. Continuing to kind of give it some potential likelihood that it's going to go up, right? Again, I talked about this way before. When everybody was still talking about going down, I talked about this being distribution, this being accumulation, and that we would rally up higher. We'd push out, get resistance right there is where I said, and we did. We'd push out and come back and retest, and we did. And then we continue up higher, and we did. So, this is the same chart that I'm using in the newsletter. And so now we're just sitting right here. Right now, I've got this as a 3-4 and then a 1-2 of 5 heading back up here, going up, okay? This could be one and done here. This could be wave 1 of 3, okay? But right now, we'll consider that if it drops below this swing low here, this 59.5 kind of area. If we're dropping below that, then we'll look at this maybe as an A, B, C, or a 1-2 of A heading down, making this a 1 and this pullback a 2. If it does break down below this swing low right here, which is my wave 4 on the lower count, let's see, it's right here. Can't get it on there. There it is. It's right there about 58,943, 944. If it drops below that, then that invalidates my current count. Again, that makes this much more likely a 1-2. And in that case, we look at 57.5 and then 55,000 as our targets on the downside. And then we'll go from there, okay? Now, getting to those targets, we want to see, do we come down in 3 or 5 waves? If we come down just in 3 and then we rally off one of those 2 targets and head back up above this swing high right here, which is 63,726.58. So if we go 1, 2, 3, and then back up above that, that'll say, okay, that 1-2 is done, and we're heading up for 3. 3 of 3 here, okay? But anyway, we're looking right now, if my count is correct, let's kind of zoom back over here. Again, looking at this as 3, 4, and then 1, 2, 3, 4, 1, 2. This is questionable because it's a very deep pullback. But it bounced where we were looking for it to bounce. And it's rallied back up here. And so, right now, again, looking at this coming off the bottom here, and this being, of course, this is just that September. It's not the bottom over here during the summer. It's just 1, 2, and then it's coming off that wave 2. So it's that wave 3 going up, right? And so potentially, we've got our 3, 4, and then 1, 2, 1, 2, 3, 4, and this could be wave 5 making some large move up, right? If it is, we'd look for it to get up here, the wave circle 3 to be up here at 80,561. Now, again, I may have to come in there and recount this, depending on how this plays out, if it does head up higher. But the gist of what we're looking at here is the idea that if you expect price to reach 180, 260, 320, 360, whatever, something like that, then this kind of subdivision necessarily needs to happen so that price can keep rallying higher. So we would expect to see things like this continue to happen as it continues to rise. Okay? So that's kind of what we're looking at right now. So we're just kind of playing it locally here. The idea being maybe that we've got this 1, 2, and a 3 happening, but with the understanding that we may have to change this, the understanding of these subdivisions in here based on how price actually moves up if it does rally up and above, right? But again, if it continues to drop on down here, the wave 2 swing low is right there at 59,522.89. So if we're to drop below that, then that says, you know, a minimum we've got A, B, C, right? But the likelihood of it dropping through there is that it will drop below wave 4 here, which would invalidate that overall count. And again, all that would say is this is a 1, 2, 3, 4, and a 5, which gives us then our wave 5 up here, which gives us then the 1, and it's just a larger 2 pullback. Again, nothing in there even hinting that the top is in and it's all done and said for. That doesn't mean it can't be. It just means that you cannot look at that chart there and go, oh, it's done. There's nothing on that chart saying it's done. Okay? Not yet. Like I said, you have to have that much larger pullback, the much larger drop to kind of get to that point. Let me see here. Catching up to all you guys. XRP Bandit, what's up, man? Let's see. Christopher, you think that the pandemic made a lot of people bitter? You know, I don't think it's just that. I think it's just that people in general don't mind their P's and Q's. You know, when I was raised, it was this idea of, you know, if you were going to say something, you usually said it to somebody's face. And if it was disgusting and rude, you might have got popped in the face, right? Social media makes this, social media and this whole idea of they can be anonymous and whatnot, it makes them not fearful of being popped in the face. And so they just kind of mouth out, right? It is what it is. Those of you that are, you know, anywhere near my age and older, you'll understand, right? Those of you that are young enough that do understand what I just said, I think you're going to have a great life ahead of you because you do get that. Let's see here. What's going on, Scotty? Good to see you. I just had a big beginning there. I had a big explanation of how money creation happens and, you know, why, you know, all this Fed printing doesn't necessarily equate to monetary inflationary effects in the market. Yeah, so that's all. Let me see here. Man, all these people coming on here. I don't know if anybody blocked them, but I just did. Let me see here. Telluride says LA Port is backed up because they can't accept empty containers because California zoning code won't allow trucking companies to stack them. Good thread on Twitter about it. Yeah, you know, again, more things adding up to the whole backup there, guys. At the end of the day, all it means is you ain't getting the stuff that you want to get. And so, you know, you got people, you know, competing over these things that they really want. You know, it is what it is. What are we going to do about it, right? Anyway, so let me see here. Bill says their ports in the UK have also been backed up because of all the EU regulations since Brexit, which has caused huge problems in the economy, lack of goods, and panic buying galore. And then, of course, you know, we also have the energy stuff going on, right? You know, again, you know, a lot of things to that. You know, some of them. You know, we say all these things, these reasons for it, but, you know, again, guys, when we had that large breakdown to the negative, like WTI hit that, you know, that May 2020 contract there, closing at negative 20 somewhat dollars, having gone all the way down to negative 40 or so. You know, from that point on out, yeah, you're going to have this strong rubber band effect that's going to lead to higher. So, I mean, you know, prices were rising. We're going to rise, you know, kind of to these levels anyway. So, you know, it wasn't that it wasn't there already, or that it's really much a surprise if you just normally watch charts, right? When you have such a big, strong move down like we had, you're going to expect a nice, strong rebound, right? It's just, you know, again, it's that whole idea of a rubber band. You pull it back, and the further back you pull it, the stronger and faster that, you know, when you let go, it's going to go, right? So it's the same thing in the markets. But, you know, of course, exasperated effects there on, you know, just with everything that happened. You know, we had the demand continuing to rise, and then we had production slowed down, you know. And production was already slowed down prior to all that happening, you know, because, again, you know, as I've explained before, you know, with oil and how it all works, you know, we just had that really bad slowdown anyway. And then we had the pandemic come in, and all of a sudden people weren't taking orders that they normally take at the time, you know, airlines and cruises and whatnot, where they're trying to lock in prices for their longer period. And so that's what happened, you know. Again, guys, remember, with WTI, you have to, if you're trading WTI crude oil, you have to actually accept the oil, right? You can't. It's not financial based. If you hold the contract at the end of the period, you have to accept the oil, which means you have to have somewhere to put it. And at the time, of course, there was just this big backlog of anywhere that you could store it. Here in the U.S., which is where WTI, is from, all the oil is sent through pipelines. Cushing, Oklahoma is your main hub, and Cushing, Oklahoma, all the storage there was taken. And then worldwide, I think at that time, we had something like 80 or 85% of worldwide oil storage was full. And so, the idea was, okay, now we have to accept it, truck it. We have to accept it, and we have to have plans already made for tankers, and then we have to truck it from there, to the tankers and get it out there. And a lot of people made a ridiculous amount of money on this. This is something I talked about at the time. I said, this is what's going to happen. Those that can do it, that have gotten ahead of time and have been able to secure these cargo ships, are going to do that, and they're going to have it sit because they got paid to accept this oil. They were getting paid $40 a contract, right? And so they were getting paid to take that oil off. So you get paid to take that oil, use that money, go get a tank, you set it out on that ship for a year, wait for oil prices to really rise, and then you sell it. Man, you make a killing. So some people made a killing. They did exactly that. Now Brent crude oil up there, Brent crude oil, is actually ends up on ships, right? It's already on ships, right? It's not pipelines and what like we do here. And those contracts you can actually settle in fiat. You don't have to settle in actually accepting the oil. So those are the differences between the two things going on there, and where it's all led to where we kind of are today. But with oil prices where they are, a lot of these, if you watch the oil rig count, they have increased. You can watch Baker Hughes. Their oil rig count continues to rise, and that makes sense. As oil prices rise, it becomes easier to justify drilling for it, right? And so that's where we're kind of back now. Again, fracking and sideways horizontal drilling is very expensive. It's a very expensive way to pull oil out of the ground. So during that 10-year run there, running up to 2020 or so, 2018, it was very easy to get money. It was very easy to get credit. And so all this money was flowing in these private equity firms, which were financing all this exploration and this horizontal drilling to pull oil out, which put the U.S. up there at the top of oil production, right? The problem is when the price of oil, because they could compensate for the cost of doing that with the price of oil. Oil had really risen. And then it went down, and all of a sudden, oil rigs counts dropped because you can't afford to do that anymore. Well, now that we're back up here at $80+, these oil drillers, this fracking or whatever, can continue to happen again, and produce more. So, that's the whole oil thing going on there right now. Of course, you got natural gas still going up. Natural gas, of course, had its own issues with production and flaring and stuff like that. Y'all over there in the UK also had all those, like you said, regulations and whatnot, Bill, coming out over there, just really kind of making it a bad situation. China, again, all the pandemic, the slowdowns in production and everything, but the demand's still up. And, one of the largest importers of natural resources is China. And so they said, okay, well, go and buy it at whatever cost. Drives the price up, right? Competition. So, yeah, that's kind of where we are with all that. Let me see here. Let me kind of catch up with you. Let me see here. What's going on, Kyle? You said you have Neil deGrasse Tyson share this same article on Joe Rogan. Oh, the great passage, the one from the Carl Sagan book? Yeah. It's really good. It's timely right now, I think, as well. We tend to get all hyper-focused in what's going on today, and we don't ever really look at what's gone on in the past, which is, interestingly, the same thing with the markets, right? So it's always good to kind of take a step back and see how things are going, see what was said previously, see where we're at, and then see if we can draw some conclusions maybe from it. So, yeah. GT, good to see you checking in from Washington's West Coast there. Brian, you're welcome for the newsletter, man. Kerouac, what's up, buddy? I'm having a great day. Let me see here. Aramis is here. Let me see here. Kyle says, I think with some with how much of the leverage longs we have, I think he means in Bitcoin, they will see them crank back more, maybe 57, 56 before we get one more move up. Yeah, definitely. It's what we're looking for if we get that breakdown. Sure. I think it makes a lot of sense. There's good real volume support in those areas. So they make a lot of sense as far as right now, at least as far as targets if it continues down. Sure. Leverage is at an all-time high in crypto markets, and not, of course, just in crypto markets, but everywhere else pretty much. Adding to, the whole idea that when it goes bust, right? Everything, really. Do I offer small week-long classes for brand new investors that really have no idea what they're doing? So, Brian Allen, here's the thing, buddy. I've got a new back end that we're finishing up that will be located at texaswestcapital.com, and we'll eventually move everybody over there. And with that, I'm going to have the ability to actually start adding coaching classes. And so I've looked at that, and I think what I can do is I can add small groups and individuals to do that. And these will be different costs than what our normal, get all membership kind of thing gets you. But if you're new and you're looking to get up to speed as quick as possible with real information and whatnot, then the small class thing would be the way to go. Or if you've got the money to do it, the limited one-on-one spots I'll have will be a great way to go. By the way, those one-on-one spots will also be great for if you're trading and you're just having issues. You can't maybe figure out what you're doing wrong, why you can't get it to work. That would be a great thing to do there. But anyway, this is just something that people have asked me over the years to do. It's very time-consuming to do the small groups, and especially the singular ones, person to person. But I'm trying to work everything into a way that I can do that, so that way I can just provide what people are trying to get. So be on the lookout for that. Hank, what's up, man? He says, better late than never. I agree. Couldn't that just be a WXY correction as a 333 for your deep 2? Yeah, it could. Sure. That's why I said, I'm not convinced that this is necessarily the bottom here. That's why I pointed out that we are so close, that it's so deep that it makes me cautious. As I told Discord, this right here can be counted. It's really kind of ambiguous. I can get a pretty easy, as you see here, ABC down. I can also get a pretty easy WXY. I can also get a pretty easy 5 down. So it's pretty ambiguous here. So I want to pay attention to what's going on here and how, do we get this rally out and how it looks as it does it to get a better idea. I know that we've got, in this area right here, we've got accumulation going on based on that price action and this volume, okay? So I know we've got a bit of accumulation here, but that doesn't mean price has to rally up forever. It could be accumulation, distribution, and then price heads down lower for a different accumulation lower. That could still happen. For right now, locally, we've just pulled back to this previous range resistance. Kind of this cluster of demand right here. That's kind of where we're at. So we'll see. Do we get up? If we're dropping into this, I start feeling more like we're probably going to head down here, break down below wave 4 here, and head down to that 57.5 or even 55. But before we do that, if we're breaking down below this channel resistance here, this range resistance, I would look for this blue range, this demand right here between the 61.8 and the 70.5. So kind of between 61,095 or so and 60,733. Around that area, I would look for to see if we don't get a rally out of that and then a move back up. Because at that point, again, from this rally, that's just right to this high volume node. It's a solid wave 2, 61.8 to 70.5. So I don't want to discount and say, oh yeah, we're definitely heading down. If we're coming down, I want to watch how we react here. Do we get it and then rally back up above? Because if we do, this could still be an A, a B, and a C. But here's the thing. We are already off these lows here. We've already retraced almost 61.8. So the odds that this is an A, B, and then we'd have a C, it doesn't mean it can't be, but usually if you're going to have an ABC, that A is going to stop usually around the 38.2 or prior to the 50. When you're breaking out above the 50, usually it's not an A. If you're going to continue up higher, usually it's a 1. Again, but there's no guarantee that it is. So I want to see, again, do we rally from here and head up, or do we drop down here and then head up? And then I want to see what form that takes. But if we are, especially if we're dropping below this 70.5 area here, more than likely, I think we're probably going down below this wave 4 over here. So this becomes a 1, and this is an A and a B, and working on a C down here toward, again, that 57.5 or 55. Now, usually the first place we look for a wave C is at 100% of wave A, right? If this is a B here, again, I'd say there's different ways to count this. I think what we may have is an A, a B, and a C, so a flat correction here. So it means A would end here, B would end here. And that means at 56,400 or so is where wave C would equal wave A. Now, when you're doing corrections, that's usually your first target. You usually look for wave C to equal wave A. Importantly, depending on how soon that gets down there, this is this large ascending channel EQ. So that makes, there's confluence there. You can see that drop down there, find support on that EQ, and then rally back up. But then that puts it between the 57.5 and the 55 area there as well. So, a lot of possibilities in this. We want to play shorter term, watch how it plays out, and then go with some confirmations on that as far as what it's going to do. So, yeah. Let me kind of catch up here. Let me kind of see here. Kind of catch up. Let me see here. Leighton, what's up, man? And Teo, I see you there. Leighton says, going to be a lot of companies going under who have doubled, even trebled orders on supplies to meet demand, which when they eventually come through, we'll find that the demand has evaporated. Hank's questioning the idea that the demand's going to evaporate. I mean, it's definitely, sure. It's definitely one of those scenarios that could play out. Again, savings is already up. Here in the U.S., the student loan moratorium ends at the end of January, which means for most college graduates here in the U.S., especially over the last 30 years or whatever, their student loan payments or their mortgages, or student loan payments at many times are even larger than their mortgages. So that's a significant bill that comes due now, again, monthly. And then of course you've got mortgages and everything. And so, if the economy does roll over and do its thing, if it does, that would put downward pressure on demand as people become fearful and then kind of step back. And so when savings is probably increase at that point, I could see that definitely happening. We'll see if it does. But if it does, again, it could lead to quite a shock. Sure. To the whole thing. We'll see. Oh, Hank says he knows he's referring to to import troubles. Brian Al says coaching classes would be awesome. I learn better when I can ask questions. Well, for Tier 3, we have a weekly live stream that I do on Mondays for Wyckoff, Thursdays of Elliott Wave, and Wednesdays are tips, tricks, and techniques, which I usually either show our Tier 3 members how to. I show them different rules-based trading strategies. So you don't have to actually think about it. You just have to follow the rules. Is it this, this, and this? Then if so, buy. If not, sell. But I also take some time and go over different indicators and how to use them properly and what they do. Candlestick patterns, price action patterns, stuff like that. And we do that every week. One day for an hour each week. So it's 3 hours of live stream every week. And you can ask questions at that time as well. So yeah, that's always available, to Tier 3 members. And if you can't attend the live session, you can, attend the archive. Sure. Let me see here. Budman, what's going on, man? Good to see you checking in. Let me see here. Is that missing? Good to see you. Hires checking in. Let's see here. Oh, yeah. A member here saying, you guys, imagine you can get this amazing learning lessons and updates on TWC. It's worth every penny. They're a Tier 3 member, so, they'll tell you better than I will. Right? So anyway, yeah. So this is kind of where we're at with everything, guys. There's a lot more to what's going on economic-wise, via the economics and global finance and macroeconomics and world trade and all this stuff. There's so many different inputs. There's so many variations, so many variables, so many factors, okay? To simply say, oh, money printer goes burr means that we're going to have monetary price inflation or monetary inflation effects on pricing is just asinine, okay? But again, you know, at this point, it comes in your life. Are you a person that just blindly follows sound bites and does what everybody else is doing? Or do you step back and go, okay, well, yeah, that maybe sounds correct, but let me just verify this. I'm curious. I want to know. It's not enough for me to simply just parrot what somebody else is saying. Am I really interested in learning? And so, you know, again, I say that from a point of, you know, where I am in life. You know, again, in my life, I always, probably more so than I should, I question just about everything. I've got a real desire to actually learn things. And so that really helped me in trading because it helps me, you know, become this, you know, actual student of the markets, guys. I'm not here to say, okay, there's this one system that does it and that's it. But, you know, again, you just kind of have to decide who are you in life, because that you're telling, if you understand who you are just generally in life, which most of us don't take the time to learn, right? But if you do, it helps you understand who you are in the markets, which means you understand if you're willing to step back, you will understand how you're viewing the market and whether that's sustainable or profitable or whatnot. You know, at some points I just give up, you know, online. You know, if somebody comes off as a jerk, sometimes I'll try and still converse with them and help them understand what they're misunderstanding. But usually the people that come off that way, a couple of times they've changed and it's been great. Most of the time they just remain who they are, and the more you talk to them, the more defensive they get in their positions. You don't want to be that, guys. As a trader or an investor, you don't want to be that. You want to be fluid. You want to be able to understand where you may be wrong and be willing to say, okay, I'm wrong. Let's change the narrative. Let's change my understanding. You know, one of the best things you can ever learn to be or to want to be as a trader is to be more interested in being profitable than being correct. Social media makes that really difficult for a lot of people because they feel like, oh, they said something, so they have to stay that way. You don't have to, guys. Don't let any other idiot online tell you that, okay? The biggest thing about being a successful trader investor is being able to be fluid, to be liquid, to be able to change your opinion about things or your thoughts about things when new information comes in that proves that what you're thinking is not correct. Like I said, most people just kind of turn their head down, la, 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 I can't hear you. And then they go on saying the same thing they're saying, even though they've been shown, you know, that what they're thinking is not correct. So again, guys, you know, I tell you, you know, trading's simple. It's not easy. The most difficult part of trading is fighting yourself. It really is. It's not the Wall Street. It's not the whales in crypto, anything like that. It's yourself. So if you want to be a better trader, learn to be more open and understanding and be willing to be profitable over being correct. Okay? So let me see here. Andrew Bennett, what's up, man? He says, does Wave 5 top at 74,000? Do you see this as a possibility? You know, okay, so here's the thing. If we zoom out here, let me use my other chart here. If we understand this to be a 1-2, then our minimum Wave 3 is 79,440. And then, you know, here on Coinbase. Should be similar wherever you're looking at, whatever chart you're looking at, right? So that's our minimum. But the idea is that this is likely to subdivide, which should send us higher. So if our minimum Wave 3 is 79,440, then our minimum Wave 5, if you come in here and measure this out, I'm just going to pull this real quick, so it'll be right around that same area. You see it's up here at this other one, right? Up there at 88,525. Now here's a secret about Elliott Wave, guys. I almost always put down a minimum Wave 3 target for our chart request or hot takes or anything else I'm discussing for our members in Discord or even out here. I always give you a minimum expected Wave 3 target and then a secondary target. And that secondary target most often is just your minimum Wave 5 target. More times than not, if Wave 3 continues to extend beyond its minimum target, it usually completes at that Wave 5 target. However, if this is, the end all be all of the bull run and it ends at the end of this year, beginning of next year, right around that time, then we should expect that wave 3 here is probably going to overextend even further. And we could actually see wave 3 ending up at 104, 105,000, or maybe even higher. But that would be the product of the subdivisions coming on here. So yeah, I'm looking for this wave 3 minimum here at 79,440. If this is a 1 and we're getting a 2, look at this. If this is just wave 1 of 3 right here, then as you can see here, that 57.5 and that 55,000 is this high volume node right here. It's right on, it's this kind of area here, right? So if we just sit there and we go, okay, well, this is 1, 2, and we're going to pull back here for 2 of wave 3. Let's see here. So 1, and let's say we get down here to the 38.2, which is right there around 54.8, right? 1, 2, that gives us a wave 3 of 3 here at 99,226. Wave 5 at 109, almost 110,000. So wave 3 would then open up to that point. If this is just wave 1 and we get a 2 just right there, wave 3 is going to head up, up there at around 110,000. So yeah, again, minimum is where it's at, but likely subdividing here. If this is still the count that I actually have on there, and this is just wave 1 of 5 of 1 of 3 or whatever you want to look at it, it could go up even higher. So it just depends on subdividing as it goes in there. But we would expect that if this is to be the usual end of the bull run for Bitcoin, we're going to expect this to subdivide much higher and to continue going up. I mean, it doesn't have to, but historically that's what happens with the as we get into the last few months of the bull run. So yeah. Let me see here. Let's see. Any books that a newbie could read that would begin to give them a solid foundation on trading? Brian, I'll tell you what, man. If you've been, I don't know how long you've been following me, but one of my favorites, and actually the basis of everything I do. I know we talk about wave counts a lot, but you have to pick up on my ranges that I talk about because that has a lot to do with price action and volume. And that, even though I don't necessarily maybe give it as much airtime as the Elliott Wave, that's actually where it starts. And so you can go right here. I've got this list right here. And again, guys, we do get a very small commission on anything that you guys might happen to buy in the bookstore there, whatever. But for me, it just made it easier to give you a direct link to the books. And so if you go in there, toward the bottom of that list, there are some books called Studies in Tape Reading, How I Trade and Invest in Stocks and Bonds, Charting the Stock Market, Richard Wyckoff Method of Trading in Stocks, Stock Market Technique 1 and 2, My Secrets of Day Trading in Stocks. Anyway, most of those, if you look at the author, it's Richard Wyckoff. And he is, again, the developer of the Wyckoff Method. And if you read those things, you will get so much information in understanding of markets. So usually with my newsletters, I'll put a quote from Wyckoff, right? So in his How I Trade and Invest in Stocks and Bonds, he says in there, if you work in harmony with the trend of the market, your chances for success are 3 or 4 times what they would be if you buck the trend. Again, for those of you that follow me, I always talk about the importance of trading in the direction of the trend, not the corrective move back, and how that will give you a much greater success. And here we go, 100 years ago, basically, Wyckoff was saying the same thing. Again, guys, these things I say are not things that we're just talking about now. They're the truisms of trading, investing that have been around for, 100 years. And so they worked then, they were noticed then, it's still the same today. Okay? Yeah, Andrew, there's a chance of a pullback. We have to see what goes on right here for how it plays out. We'll have to see how far this overextends, or if it does, this wave 3, to see where we might be looking for a pullback. Again, if we hit that if we hit this, this, if all we were to do was to get to 79,440 here, if we were to finish it out there as a wave 3, your pullback then would likely be, right here. Probably right here around that 60,000, 61,000 area. Right, it's just basically pulling back right to the previous all-time high. If you're coming on up there to 109,000, almost 110,000, my guesstimate right now, if we were to get up in that area, let's see here, 50% is right there around 65,800. So I wouldn't be surprised to see that type of pullback toward that area, 74, 65.8 kind of area. We could still get down. 61.8 would be down here around 58.3, but I don't think we get maybe that far. I think the first two places you look, if we're getting up there, is this. You know what? That would be a wave 3. So you should be looking at. Let me flip this the other way around so it's a little bit easier for you guys to see here. Because it is a wave 3. Pull it down a bit there. And let's put this right back here. Generally you're looking for it to hit the 38.2, so right there around 74,000. It might not make it past the 23.6 here at 86,300 though. So if we were to get up there, just without anything going on here, I would initially look right here at 86,280 and then maybe at 74.3. But what I want to look for is the 5 waves up, that complete wave 3 here. My first target is that wave 4. I'll look for this larger wave 4 to pull back to the interior wave 4. And usually that's going to be right around, this 38.2. Sometimes the 23.6, depending on how that overextension works in wave 3. Okay? So I can't really tell you for sure where we're looking at. I can say that if it gets up toward this area, then generally we look for these two targets right there. As this plays out and I see that wave 4, that's where I'll start looking right there. Yeah. Let's see here. Alex T, what's up, man? Austrian national holiday. Man, it's a day off. I'm all about a day off, especially when it comes at or before the holiday, right? Or the weekend, right? Get an extra day off on the weekend. Now, looking at the DXY here real quick, guys. Let's see here. This is the daily, as you can see here. Locally here, we've broken out above the descending resistance. We're well within what would be a bull flag here, right? The pattern target is 1.012 above the point of breakout, which will carry it here. Remember, this 94,742 on my count, wave 3, wave 4, and then this is wave 5 down here. And so in Elliott Wave, you look for a breakout above wave 4 as the first clue that your bottom may be in or your top may be in, right? So we need to get, as I've been saying forever, it seems like in a day, we need to get above 94.742. Now, that doesn't guarantee that the bottom's in, but it's that first step of what you're looking for on the big one, okay? So that's what we look for. Realistically, this is an inefficiency right here, this strong move down. We call these inefficiencies. They basically work the same as gaps, which means that when you get into them, they work like a vacuum and they suck you up to the other side of it. So realistically, if we're breaking out above the 94,770, we should expect to get up into this area up here, 96, 97. Again, right here, there's nothing saying this can't be an A, a B, and a C here. That could still be, again, and that would potentially bring us down. But, right now we can kind of look at it as potentially a 1-2. And then, continue to work its way up here in 3 or as another 1-2 of 3 kind of working its way up. But big picture here is that we're here. I would become more concerned if we were to drop through this ascending support here. Right now, all we've done here on the daily is pull back to the daily pivot, dojis across, and then rally back out of it. And in that time, you can see here we bottomed out and oversold on the daily Stochh RSI, crossed bullishly, and right now we're trying to break out of oversold. Again, guys, a lot of that going in there. We can also say that right here, from this previous swing low to where we're currently at, potentially is some sort of hidden bullish divergence right there. Let me kind of make this a little bit easier to understand. Nope, wrong one. Divergence, there we go. Visibility only on the daily. And so, if this is hidden bullish divergence, where you have higher lows in price but lower lows in your oscillator, then that's a continuation of the bullish trend. Of course, this is the bullish trend, or even from over here. But it would be a continuation and working it with there. So, I mean, that's what we continue to look at there. There's a lot to be said about, coming in sideways between your pivot and your R1 and then, testing the pivot and rallying back off it. Now, we can also look here on, this is the DXY itself. We can actually look at your dollar futures. Oh, you know what? I could probably just do it this way. Dollar futures. Yeah. So we can actually look at your dollar futures here. And, again, this is one of the other things I was talking about was the idea that we were breaking out here. We're going to pull back to this green area, and then we were looking for a breakout there, which would be bullish. And again, you can kind of look at what you're doing in this area here, as far as this sideways going on here, right? And so what you notice, we can kind of zoom it in here even more, is that you have this, as price here finds this bottom, starts rallying up, as it gets to that bottom, you're getting more and more interest at the lows here. And there's no follow through then. So you get your final spike of volume right here, and you get this slightly lower low, but there's no follow through. And instead, price rallies up on low volume, which means there's no supply coming in. It means that the supply is exhausted at this point. And so you kind of look at this as accumulation has taken place down in these lows here, and we're rallying back up here now and looking to find its way out. Again, this is something else I had posted one of the previous, one of the previous newsletters. And then, of course, we talked about the idea that maybe we've got a double head. We've got an inverse head and shoulders here. So basically, if you looked at it, and guys know I hate this pattern, but I'm going to show it to you anyway because it legitimately actually is one of those ones which really could be. Right now, it seems to be suggesting that it is. So we look at it like this, right? We look at this as the head and shoulders. And then you say, oh, but Chris, we've got the two dips here. Well, those two dips could be a double head, a complex inverse head and shoulders pattern. Importantly, what we have here is this rally in volume, this expansion in volume, and nice large candle spreads as we completed what would be the shoulder here, and we're breaking out. We do have high volume and large candle spread, as I point out right here, on the breakout of this descending resistance, this neckline. All we've done since then is come back and retest that as support. Now, if this is correct as a complex head and shoulders here, just based off that pattern target, off the height of that pattern, you've got this target up here. I have this pulled exactly. There we go. Right there, about 5 points above that point of breakout there. So that gets us up here basically to this 98.1725 area. Now, as I pointed out here, that first step, as I was just talking about, in confirming this possible macro bottom, is right there at the 94.795. The pattern target will take you up here to that 98.725. This blue swing right here, this swing low to swing high, has a target up here of 97.77. So those are the major levels that I'm watching on that as it continues to go there. So again, if you look at things like how does your local currency benefit, right? Do you have larger capital inflows than outflows? In other words, are you having foreign investment in your country's debt? As I pointed out, the U.S. does, significantly so. As a matter of fact, it has so much that it's a few times greater than everything else combined or something like that. I have to go find that. I'll post it on Twitter if you guys follow me on Twitter or even my other social media accounts there, Facebook, Instagram, all that kind of stuff. I'll post it on there if I can find it later today. But there was this thing I was looking at that was talking about how the debt was so, that people wanted U.S. debt so much that it was greater than all the rest of the debt that they're buying anywhere else, kind of thing. So, again, if you're looking for why does the dollar get stronger, because people want that debt, which, says that they believe the economy's doing well. And if the economy's doing well, then that means rates should rise. That's the draw from it, which means, of course, interest rates rising means the value of your currency rises versus others with lower interest rates. So, this all kind of feeds into that. Okay, I'm going to go ahead and get rid of this person. Don't come in here saying things, guys. Don't come in here just trying to post stuff. Self-key, really? And their TV canal, good to see you. Block Tech checking in as well. Yeah, Brian Allen, man, those books that Wyckoff wrote back, 100 years ago, very inexpensive, 8 or 15 bucks a piece. Very inexpensive, but definitely worth it. And he talks about the stock market because that's what he had back then. But all those same things, you will notice that they are the same things that I talk about today, the same things that we still look at today. So it's a really fantastic place to start in understanding how markets work and, how the supply and demand goes in the market, how the bigger operators work, how, successful business people aren't necessarily and often are not very good traders or investors. They're good at building their business. They're awful with their money otherwise. So, like one of the responses I got about the whole, when I responded to Jack's hyperinflation comment was, well, I think I trust him because, he's this big successful guy and he's got all these successful businesses. Well, again, historically, we know that good business people generally aren't that great at trading or investing. It's like anything else, guys. You could say the same thing. If you think that that's true, then you can change that out with successful business people would be successful football players or successful pianists or successful whatever. You can put anything in there because it's not related. It's a whole different skill set to trade or invest than it is to run a business. It is a completely different skill set. Said as somebody who does both. So you guys, it's easy to get caught up in this, and this is what we see a lot. With people, especially online, they follow these large accounts that are large because they have businesses, and then they say what you want them to say. But then you find out they really don't have a lot of understanding of what they're talking about if you hang around long enough. So, again, guys, got to be careful with that, okay? Let me see here. So, again, rising dollar, good for the U.S., not so good for everybody else. And so we'll see how that continues to play out there. In one of the, at some point here, either in my newsletter or one of these live streams, I talked about how China has taken a different approach to their markets. So whereas the Fed has done QE, China has just not done anything really. They kind of just letting the market feel the pain, work itself out. Now that has a lot to do, I think, with them wanting to make their digital currency the world reserve currency, to displace the dollar. I'm not saying it can't happen, but it's going to take a very long time for it to do so. They are nowhere near as I've gone. I think I did in the newsletter because I gave you guys some numbers and whatnot in there. So look back through our previous articles there, our previous newsletters, and you'll find it. But they're a long way off from that. Maybe like the second or third one I put out. Man, oh man, guys. Whew, I feel like I talked a lot more today than normal. Could I give my take on the hourly volume for Bitcoin? Just continuing to develop my understanding of how volume relates with the chart. Let me see here. Bitcoin. Let me go over here. Hourly. Yeah, so if I look at this, what I notice is we've got a lot of overlapping price action. We've got smaller candle spreads overall. We got a few big ones, but mostly a bunch of smaller ones. It's all overlapping. Even though it kind of goes gradually lower highs and lower lows, it's in a very overlapping manner. And volume drops off with it. Usually that's the sign of a corrective move. It doesn't guarantee it, but usually that is. Your impulsive moves look more like this, where you've got the large candle spreads consistently, and then small areas of pullbacks along the way, and then continue rallying back up strongly. And you see volume expand with it. On this drop down here, we can see there's a big bit of expansion of volume down here at the lows, at the end of this here, which tells us that you have demand showing up in this area, which makes sense because you have this demand cluster right here. So they're going to try and support price here. And then those that miss the breakout here are going to be interested in buying this area as well. So you did have the initial, let's see if I can take this off here. You did have this initial move up, which was then rejected by the supply here in this area. So just reject, but then you've got, again, demand showing up again, trying to push up. And so again, what you want to see, if you think you have a motive wave, if you think you have a, whatever time frame you're looking at, a directional trend, you want to see something like this. Okay, you want to see small pullbacks along the way, large candles, expansion of volume. The other way, where you've got a lot of overlapping, you see how this goes up, up, up. It's not really pulling back into the other one. It's continuing to just pull back locally. Here, pulls back up, then pulls back up way into it. Goes down, pulls back way up into it. And, of course, like I said, right through here, you also had the decline in volume. That decline in volume shows a lack of interest as it's selling it down. And so if you're selling something, you don't sell into a lack of interest. Because you're forcing yourself to take less. You're chasing price down. You want to sell into strength. You want to sell into rallies, right? Or you want to buy into the rallies to the downside, right? Those declines. You don't want to do the opposite. And so that's what we're kind of looking at there in terms of price action and volume in this local area right here. So yeah, again, you know, you got that same overlapping. Yeah, you got a little bit down here, but see how this is all overlapping? Comes down, pushes back up, overlapping. Drops down, pushes back up, overlapping. And you got the volume dropping off through it until you get down here to the bottom, in which point you have the expansion of volume, the interest by demand. And so that's kind of what we're seeing right now, but you have to see follow through. It doesn't guarantee that it's going to rally up, but this is the point you should be paying attention. You're looking to see that you get follow through now. And so right here, you're watching to pay attention. You have your descending resistance here. And then, of course, it continues up here. And you get that break, you get this follow through higher through that resistance. Same kind of thing we're looking at right here. Looking for this rally up through that resistance. And then you want to see, as it continues to rally, you want to see its volume continuing to kick up with it as it goes up there. Telluride says, if you have the time and focus to apply yourself, you'll find tier great value. And I do agree with that. Again, guys, I had somebody who commented at one point. They said that it was really positive for what we do, because they said that I don't try and force you to stick around. You come in for as long as you feel you need to be in, and then feel free to move on if that's what you need to do. I don't want you staying in longer than you feel like you need to. And we always welcome you back if you need to. Maybe you left a little early. Maybe you got to go, man, okay, maybe I didn't know what I need to know. I need to go back in. Or a while later you come back. We have sometimes members that come back just to get a refresher on things, that they had learned and they'd done, and they feel like maybe that they need that refresher, that maybe they aren't following through as they should. And that's the way it is, guys. It's never a hard sell. I want you to come in. I want you to be in as long, whether it's a month. I don't think you'll learn enough, honestly, in a month to really do it. But if you're going to, make sure you have the time to devote. We have so much content, especially on the education side of it. I don't want you coming in and spending that money and not really utilizing it, because you're just wasting your money. And that's not going to help you. And, it doesn't do anything for me. Sure, it brings an extra few bucks, but that isn't the goal, right? The goal is that if you're coming in, that you're going to use that to do, right? And so, like I said, if you want to join, if you haven't joined us before, we do have that 50% off coupon right now for Tier 3 for 1 month. But again, I tell you, it's a great deal to come in at 50% off for that first month, but just make sure that you're ready to actually jump in there and take advantage of it. Otherwise, again, it's like a lot of things that we tend to do. We buy it and set it to the side, and we just waste our money. I don't want you guys wasting your money with us, okay? So, yeah. But if you want to, then you have fantastic people like Telluride and others that you see on here that are actually in and have been with us for an extended period of time. And they're extremely helpful, and they're very kind and always willing to share what they know and answer questions and whatnot. So I think that's a big benefit of what we have there. Ethereum. Here's my big Ethereum chart, man. So let's see here. So as you can see here, we have this all-time high back over here. This again is the Coinbase chart. This all-time high at 43.84 and 43 cents back in May. As you can see, 43.74.95. So basically 43.75 versus the all-time high at 43.84. You're about $9 or $10 away before we got rejection pullback. You know, you usually expect this rejection coming up into it. If we look at it, you know, there's supply up in this demand here, right? And so we're always cautious about trying to enter in that area, right? Because usually your first move into it's going to get you rejected. Now, it went pretty far into it, which was, it says something for the demand there, but it was eventually, you know, rejected. Now, as you look at this, you can see that it pulled back to this previous area of resistance, and now it's rallying off that. Again, guys, I always tell you to look left, right? So if you look here, look at where this is. Your initial, you're next to the last resistance before that peak at that all-time high was right here. It's the same place in September that it was rejected. And then again right here in October, and then it rallied up, and now it's using it as support. So this is good. As long as this holds, we should be heading up higher. So I think we're going to head up higher. I don't see any reason why we can't hit about 6,400. I think we'll probably end up going up higher than that, but I don't see any reason why we can't hit at least 6,400 on Ethereum. Problem with Ethereum is right now it's really expensive to move stuff around, right? Gas fees are ridiculous. At least the last time I checked, they were. So you've got to, you know, always, you know, everybody's like, oh, I want to be in Ethereum because it's moving, but when you get in, you have to consider the cost of doing so. So if you're buying Ethereum or something, or sending it somewhere, you know, however you're doing it, if you're paying fees, not just to trade, but just to get your Ethereum or get it where it needs to be to trade it, you need to take those into consideration for what you expect is going on in terms of targets. And then you need to balance that against, okay, can I maybe get a better return elsewhere, a better overall return? We're not just saying, is this going to have a larger rally or a greater percentage rally? Because if it costs you a lot of money to get involved in that, that's going to take off a lot of that money you're making in profit on that rally. So you want to make sure that you're being smart about your entries, guys, and what you're looking to enter. Okay? So anyway, right now, you know, again, breaking up through here, it looks good at this moment. We're looking for a breakout above. We're at 4,200 or so right now. Again, this all-time high sits up here at basically about $180 from where we are at the moment. $185. Let's be realistic, guys. That's nothing. That could pop up that quick, fast, in a hurry, right? This candle right here is $312, right? This one right here is $150, right? So, I mean, daily candle could do it in a day easily, right? Once you get above all-time high, you enter something called price discovery. Okay, if you guys don't know that. What that means is, in this area where we've already got an all-time high made, we have all this price action going on here, which gives us areas of resistance along the way, right? Clusters of activity, right? So, rallied up here, drop back, and then pop back up. Resistance, right? We break out of it, but look at this right here. This next area, which is this right here, resistance. We pull back, but we're finding support then on support, which is developed, right? And then we break out, and then again, we find resistance here. We'll back a little bit, come on back up. Here, pull back to that previous area. Always look left, guys. What happens in price discovery is that there is no longer these areas of support and resistance. And now we're looking at fib extensions. And again, that you know, in other words, it can move fast and hard through areas. Look at this right here. Because there's nothing historically in its way. There are no bona fide, verifiable levels of resistance along the way. So, you know, it's usually best when you're hitting all-time highs, when you're getting above that, entering price discovery, to zoom out and take larger time frame trades. Because the last thing you want to do is think that you know what's going on in a very short time frame just to have it take off without you. and then you're out, and now you got to figure out how to get back in. Now, obviously, if you're in tier 3, we've got over a year's worth of mostly rules-based systems that you can use to figure out how to enter that continuing rally. But if you're not in there and you don't have those, again, it can be very daunting and very difficult to try and enter back in. So, yeah. Hey, Bianca, always good to see you checking in. Telluride says that he's in the high gas fees are bullish for Ethereum camp. And he says if you buy on Coinbase and leave it there and buy or sell there, you don't have to pay any Ethereum gas fees. Yeah. Yeah, minting NFTs and moving around ERCs is another story. Exactly. Like I said, a lot of people aren't actually in Ethereum, or they've got Ethereum and they want to trade it, so then they have to move it from a cold wallet to an exchange, and then you have to incur all those gas fees to move it. Right now, anyway. So you guys, again, my point is just that you guys want to make sure that if you find yourself at that point, that you make sure that what you think, that you're realistic about what your targets are, and then you make sure that they compensate you in a great enough way that it makes it worth your time to do it. Okay? Let me see here. So yeah, but Ethereum, continues to look good. And as long as the Ethereum looks good, then, in general, the protocols that you have that are based on Ethereum that are, they use Ethereum there should generally benefit as well. Again, I always use that term, a rising boat lifts all, or a rising tide lifts all ships. Usually in terms of Bitcoin and the rest of the market, specifically you can use it Ethereum and anything that's really Ethereum related as well. Ultimately, though, again, guys, at the end of the day, it's still Bitcoin. There's going to be a lot of people out there who are going to try and convince you that something else is going to come up and be a Bitcoin killer. Again, this is just a rehash. Everything that we're seeing now, same thing we saw in 2017. Same thing we always see at the tops of markets, right? But right now, there's still fundamentals I don't think are really still going to get you anywhere. I think you're still mostly, it's all about speculation. People get in because they just think somebody's going to buy it for a higher price. Now, they may try and say that they may try and give you some kind of fundamental reason with that particular protocol of why that is, but they're just trying to justify their positioning. So you guys just need to be careful out there when you're doing it, all right? I just can't say it enough, guys. Again, I've talked to people, over 25 years now. I can't even tell you how many traders I've talked to. New, professional, amateur, whatever. And, these things I discuss with you guys are the same things that are said over and over again. A lot of the things I remember from when I first started. Yes, a long time ago. I still remember them. If you have the fortune to remain a trader for a very long time, you will still remember a lot of these learning lessons that you're learning at the beginning. And it's kind of funny. You'll just laugh at yourself and go, man, what was I thinking? And you'll think back, okay, I know what I was thinking, but man, what an idiot. It's good times. And my hope is that all of y'all get to that point. It really is. And if y'all do, it's not going to change the market any. Everybody knows the secrets, so all of a sudden it's not going to work anymore. It's most people will not listen, guys. Most people think that what I do here twice a week is too long for their day. They don't have the time. It cuts into their Netflix and chill schedule. Okay? It cuts into their partying with friends schedule. But at the end of the day, you got to decide: are you trying to be a successful, at trading, or are you trying to just kind of goof off with it? And so, again, most people are going to see that. Most people don't pay much attention. And even those that are here, a lot of people will not pay attention. They won't actually, they'll hear what I'm saying, but they've got that mental block that doesn't allow them to actually accept that maybe that could be true. They're still stuck on the, I believe this, well, usually is a soundbite, and I'm resistant to change. That's usually the mindset. And it's difficult, guys. Again, trading is simple. It's not easy because you have to get through yourself. So, yeah. Let me see here. Taylor says, I'm here for the tech. Well, partially. Do run my own node, etc. Yeah. Again, guys, first and foremost, I'm a trader and investor, guys. I would like to see Bitcoin continue. I think it's pretty cool, the idea of it. Those of you that follow me, I'm not a big fan of centralized government and, groups of people demanding that others do as they do. I'm much more in the belief that you have to support the individual, because without the individual, you don't have groups. A group is just this label we give to a bunch of individuals. So if you don't protect the individual, you can't possibly protect the group. And that's what people find out. And then it gives this whole decisiveness with political parties and whatever nonsense. So, for me, I like the idea behind Bitcoin. I don't think it's going to become the world reserve currency. I don't think it's going to do anything like that, but I think it has a lot of possibility. So from that end of it, I love it. I think it's pretty awesome. And, I grew up, honestly, guys, into all the cyber technology and all that kind of stuff. I say cyber technology, but, I grew up, programming on, back in the day. The very first thing I learned to program as a kid was BASIC. If you guys remember that, the 100, you label the lines, 100 print, blah, 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 and then 200 print, or 200 if then else, kind of thing. So that's where I started. I was, and choose my words wisely here. I knew people, but we'll go with that. Back before hacking was a thing like it is today. Late 80s, when a lot of what was going on was really just this desire to gain knowledge, to understand. And so, that's where I came out. So for me, having come up through that, I find Bitcoin very intriguing that way. As an investor and a trader, though, I have no, this is either it's going to be successful, I'm going to be successful, or it's not. No, I've got stop losses, man. I am not about to lose my investment on this if it goes to pot, right? And so, again, guys, I don't wish bad for Bitcoin, but I am, paying attention to what happens in the market. Right? So if you think I guess the best way to think about it, guys, is this, okay? So we know that Bitcoin makes these big retracements, right? And when it makes these big retracements, it's what we expect. And then, again, the whole mantra is, it's going to continue going up. Well, it should, right? I mean, generally, markets that move left and up tend to continue to move left and up. Right and up, I'm sorry. I was looking at my video screen there. So I was mirror image. But markets that tend to go right and up tend to continue to go right and up, right? Just with pullbacks along the way, some larger than others. But there's never any guarantee that it will continue to do so. And my thought is, if it's a good buy, if you believe it's a good buy, not good buy, but a good buy at 62,000, you shouldn't be willing to hold it all the way down to 5,000. You should take that profit there, because then you'll see, is it a good buy down at 5,000? And if it's still a good buy at 5,000, now you've profited, and you get a chance to profit over that same move again. Again, most of the time we tend to lie to ourselves about how good we are, and we tend to lie to ourselves about how bad we are, or how good we aren't and how bad we are. I think as traders, investors, guys, the more honest that you are with yourself and what's going on, the more prepared you are to actually make profits in trading and investing. If you're investing for the longer term, if that was honestly your goal when you got in, it's fine. You can accept the drawdowns because you're looking at the wider monthly time frame, for instance. But just because you got in doesn't mean you shouldn't have a stop loss. It shouldn't be either I buy an island or I'm on the street. It shouldn't be that way. Anytime you get in to make money, there should always be with the intent of making money. Okay? That's even more important as a trader, guys. A lot of y'all maybe have started out as traders and have found yourselves as unwitting investors, right? You came in for the money, but now you're in it for the tech, right? Not you, tell your router, obviously, but those of you that get caught because you just get in, you buy the top, and then you held. The goal is not to end up in that situation. Okay? Ah, Lewis Winthrop III. 10 print hello, 20 go to 10. Yes, exactly. Basic. The start of it all right then, right? I've moved off. Obviously moved on since then, C pound and, nowadays, of course, everything's Python. Rust is big out there too. Things like that. But I'll be honest with you. One of the things I never saw, I honestly did not see it happening, was JavaScript. I did not see JavaScript becoming as big as it was, as it has. I remember, designing websites back in the late 1990s there, early 2000s. And how limited JavaScript was back then. So, we don't get everything, guys. Yeah, and that's just my reminder to y'all that I'm not out here to say, oh, I know everything about everything and I get everything right. If you've been following for any amount of time, I've missed things. I missed BNB. I missed Link. Yeah, I did. I did not get into either one of those at the beginning. I was ahead on XRP, though. XRP is my big one. So I was in on Verge, right? I was in, those of you that know, 2017, I bought Verge at 7 and 10 sats. Held I held it through that. I bought that right there. I think it was the end of May or whatever, because then a few weeks later in June, 3 weeks later, maybe something like that, it had rallied up to like 248 sats. And I didn't actually sell it then. For me, it was meant to be a longer term. The longer term happened quicker than I thought. We got out 2000 in December. When it rallied above 2,000 sats. I think we averaged out around 1,600 or 1,700 sats. So, those two were my big ones. I didn't miss, so you're going to miss some things, guys, as traders, but that's okay because you're going to get some things as well. As in trading, don't come in with this idea that you have to get everything and that if you don't, you're this loser or something. Think about everybody that got into Dragon Chain. What happened there, right? So don't put yourself in a situation. Don't ever be very difficult on yourself. Don't be hard on yourself. Accept that you made a mistake and then move on. A lot of the problem traders face is that they don't accept that they caused the mistake, that they made the mistake. It's always somebody else's fault. It's always some other reason. It's never them. And the problem with that is because you can't accept that you had some involvement in that, you can't actually move on. And so you have to be able to let go and move on as a trader because you will not get every trade. You're going to have lots of losses in your trading career, guys. That's why risk management is so important, okay? Teo, to turn on the computer? Oh my gosh, you guys are crazy. Look at Data with his as well, man. You guys are crazy. All this bringing back memories, long ago memories. So there we've had Bitcoin, we've looked at the dollar, we've had Ethereum. I find this one interesting. This is Williams Companies Incorporated. It's one of the largest held energy stocks by fund managers. And so, I think it's possible we may have 5. It's possible this may just be 4 and 5's a little bit higher. But either way, I think we're getting toward that top there. And if we're there or we're about to be there, then, I think, that's that same move in energy prices. I think oil is, potentially getting to that top there. So as far as oil goes, if we jump on over here, I got to go here in a minute. A lot more discussion today about trading and macroeconomics than charts. Usually we have more charts. But let me go right here real quick, guys. Where is it? Oil. Oh, there we go. We can look right here. So oil, with the movement over here, I've had to change up the count a bit. I think we've got a 4 here, and I think we're rallying for a 5. Minimum 86, 88, potentially ascending channel resistance as we get up here. It looks like it's an ABC here, or even a and then a flat for a B and then a C. If this is a 1-2 starting out here off the bottom, 1-2 here, then we should expect wave 3 to have a minimum target up here of, let me kind of pull this over here a little bit so we can read it. Right there around 85.50 or so. It gives us a minimum wave 5 at 86. Now here's the thing. I've got these other targets up here just based on this here. So if we look at this and we go, okay, well here's wave 4. You'll notice that this wave 5 is the initial target, which is $86. The secondary target is up here around that almost $87 area. So we look at this and we go, okay, well, here's 1, 2. We might get a 3, 4, and a 5 there. And so what we're looking for, though, is as this rallies up toward either that or higher up to that other target, we're looking for a pullback that takes it down below this wave 4. Because if it drops here below 82.97, then based on this count, this top should be in. That's your very first clue that that top's in. And so you're looking for an impulsive breakdown below that. Because when you drop below that wave 4, this wave 5 can no longer subdivide, which means you can't continue any higher. So again, if the count is correct, then that's your first clue that that top's probably in, and then you've got a nice good short going on for that. But that's what we're going to look at right now. If it continues to break out higher above here, we might have to just continue, changing this count as it does. The idea is we're letting price tell us where it's going, and we're just working along with it as it does. So that's kind of where we're at here with oil. As long as oil continues to rise, that's going to give you bullish pressure for the Canadian dollar, the loonie. So your USD CAD trade is going to have a lot of downward pressure still on it. But, the other side of that trade is the US dollar. So, what you look for, if you want to trade the USD CAD, the easiest way to trade the USD CAD and for Forex markets, the FX markets, is that if you have oil prices dropping and the dollar rising, you should be longing that USD CAD. If you have oil prices rising and the USD dropping, you should be shorting the USD CAD. Anything else where you've got one doing one thing and the other doing the other, it makes it a lot more difficult to trade. Because you're trading the Canadian dollar against the US dollar. So normally if the US dollar is doing really well comparatively to the US, the Canadian dollar, well, then, the USD CAD is going to rise, right? But the other side of that is that the Canadian or Canada gets a lot of its revenue from oil, right? From exporting oil. So if oil prices are rising, that means their revenue is increasing. And if their revenue is increasing, then again, that's a economic boost, which makes their currency more valuable, right? And so again, that would put downward pressure on the USD CAD trade. So your easiest way to trade the USD CAD is look for oil rising, oil prices rising, and the USD rising to long it, or oil dropping and the USD dropping, the DXY dropping in order to short it. Anything else, like I said, between that, if you're not very well versed in trading, it can become difficult. Let me see here. Yeah, so I think that's it's kind of where we are with that. We'll jump here real quick. I know I've got to get out of here. I know, guys. Let me look at silver here real quick. Hey, Alan N., man, you have a great week there, man. What is it, Tuesday here? Yeah, so have a great week. We'll hopefully see you catching up on Friday. Leave site. Silver, we're seeing impulsive drop down below. We see the drop here below the ascending channel EQ. Impulsive drop, large candle spread, large volume. Drop through the ascending channel support and 1 hour pivot right there. We should see a rejection in this area and see it continuing lower. We're really looking for a breakdown below wave B support here, circle B support at 22,325. If we can get that, that adds confidence to the idea that wave 2 is complete here and we're on wave 3. And wave 3 then has this minimum expected target down here of 17,545. I know that goes against a lot of what you guys normally think if you listen to social media a lot, but I'm a bit of a contrarian as far as what I think is going on with silver and gold than what the market tends to think, the people out there. So, so far, pretty good track record, and we'll just continue to see if it continues to play out. No guarantees. And if it doesn't, if I find a reason to think otherwise, then I will definitely be changing that. But for now, it hasn't done anything longer time frame wise that would tell me that I need to change my position yet, that they're both headed down lower. Silver, or this is gold, I'm sorry. We've got this this decline right here, this low of 17.83 and 40 cents. 17.83 here, so we dipped down below. Excuse me. Again, broke down on large candle spread, high volume, but we still had high volume catching up here. As you can see, the same kind of area here. Resistance support area here. This does appear to be an A and a B and a potential C. So we need to see follow through down lower. If we break out above this swing high up here, this one, at 18.11 and 50, that gives us, what appears to be an A, B, C. So 3 waves down. Break above that locks it in as 3, and we should be looking for higher. That doesn't mean it has to be, going off the bottom or anything. It just means that locally we might have to change the count a bit. I've got this big 1-2 off the all-time high there. And then locally I've got a potential 1-2, 1-2 here. If we break out above this, this may threaten this as a 1-2, but it's still potentially a 1, and then an A and a B and maybe a C up here for 2, and then rally back down. So nothing big happening here that takes us above the large wave 2 up here. That's when it would get interesting. So it's a breakout up here above 19 and 20 cents. Above that, then it starts looking, okay, maybe this may just be corrective here, and we've got a new all-time highs to get to. Till that, though, it's just corrections and sideways below that. Okay? So there we go, guys. I'm going to get out of here. Again, the market's doing what it's doing here. I spent a lot more time, like I said, discussing macro, and Fed printing and stuff like that there at the beginning. So hopefully you got something out of that, so you get a better understanding. So when you see people online screaming about hyperinflation, you recognize that they probably haven't done any research really on it. They really don't understand how it works. Especially if somebody combines the Weimar Republic, the hyperinflation that happened then, with what we're doing now. Don't listen to them. That was a different situation completely than what the U.S. is in right now. Even if the U.S. was to go into hyperinflation, it would be for reasons other than what happened in the Weimar Republic. But that's a very large subject that's going to take a lot longer than I have time to talk about here. Anyway, yeah. So as always, guys, just trying to help you out here. That's it. So I'm really glad to have you guys here. Thank you so much for coming along with me here and asking questions and giving comments and whatnot. As always, we do this on Tuesdays and Fridays at 11 a.m. Central Standard Time. We'd love to have you at howtotradetowin.com. So you get in there, use the 50% off code there at the beginning, and you can get your first month of Tier 3 at half price. We'd love to see you there. Other than that, just remember, guys, the only thing that you control is how much you lose. That's it. So the one thing you guys should be spending the most time on and paying the most attention to is your risk management, okay? That's where you make your money. Y'all have a great day. Take care, and we'll see you on Friday.